The silent warning of bond yields, Japan-America crisis, India's tough test. Have you ever heard that a wave quietly rising in one corner of the market can shake the entire world's financial structure? This wave is not a storm, not a war, and not a natural disaster, it is bond yield. Today, the turmoil in bond yields of powerful countries like America and Japan is quietly signaling global economic shocks. But the most important question is, will India remain safe from this crisis, or will another global jolt tear through its economy as well? Today, we'll discuss this topic in depth. But before that, if you are new to our channel, please don't forget to subscribe so you get all the latest video updates first. So let's begin today's discussion without any delay. According to a report by Reuters, Japan's 40-year government bond yield has reached a new historic record. This is an unusual sign for a country that has been known for maintaining its interest rates close to zero or even negative for decades. Meanwhile, in the US, the 30-year Treasury bond yield has crossed 5%, which indicates uncertainty and instability among investors. Experts do not see this as merely a fluctuation in interest rates, but as a major global economic warning. On 20th May, 𝐮𝐩𝐿𝐻𝐿, CEO of Capital Mind, wrote in a post on X, "Something very serious is happening in the debt market, although the situation in India is still stable. But the threat is looming." His statement once again draws attention to the fact that when a country like Japan, which is the largest buyer of US bonds, starts increasing the yield on its own bonds, it could have a deep impact on the US market as well. 𝐮𝐩𝐿𝐻𝐿, co-founder of IndiaBonds.com, believes that if Japanese investors start selling off their US treasuries, 𝐼𝐶, and begin purchasing Japanese government bonds, 𝐮𝐸𝐵, instead, it could lead to a massive sell-off in the US Treasury market. And this wouldn't be the first time such a potential crisis has loomed. The fear that was first seen in 2000 has now resurfaced. It's important to note that when bond prices fall, their yields rise. That's exactly what is happening now. Bond selling is increasing, and yields are reaching historic highs. This raises an important question. What about India? Are we safe from this global financial turbulence? The answer is, for now, yes, but the future remains uncertain. India's current position is relatively strong. Inflation is under control, foreign currency reserves have reached around $691 billion, and the government's fiscal policy remains stable. But that doesn't mean India will remain completely unaffected by this threat. 𝐮𝐻𝐿𝐻𝐿 also warned that if this global surge in bond yields continues, it could eventually impact India's government bonds as well. In such a scenario, the Indian government will need to be extra cautious with its interest rate policy and debt management. This is a time when even a small spark in global events can ignite a blaze in Indian markets. This warning isn't just theoretical, its effects are already being felt. The spike in US bond yields has impacted the Indian stock market too. Just last week, foreign investors pulled out nearly 10,000 crore rupees from Indian markets. The reason isn't just bond yields themselves, but a chain reaction of events: the downgrade in US sovereign credit rating, the surge in Japanese yields, a rise in COVID cases in parts of India, and tensions between Israel and Iran in West Asia. Together, these events are creating an environment where investors are fleeing toward safer assets out of fear. The chief investment strategist at GRT Investment has issued a clear warning. If this trend continues, it will seriously affect both the equity market and the currency. It would be like a double blow. On one hand, the rupee would weaken against the dollar, and on the other, Indian investor confidence would also be shaken. Another major reason behind the rise in bond yields is the potential shift in monetary policies of the US and Japan. If the central banks of these countries raise interest rates further or offload bonds, it will increase the supply of bonds in the market, causing their prices to fall further, and as a result, yields will rise even more. It's like a cyclone. Once it starts, it can have far-reaching global consequences. The challenge for India is how to shield itself from getting caught in this cyclone. The only way forward is to maintain internal economic strength, stay alert to global signals, and ensure policy-level prudence. For now, India's financial system is relatively well-positioned, but any wave rising in the global market can eventually reach our shores. The government and the RBI must respond promptly to such signals. The central bank needs to closely monitor the flow of foreign investments and, if needed, intervene to stabilize the market. At the same time, the government must display fiscal discipline and transparency to sustain investor confidence. This crisis is a stark reminder of how deeply interconnected the global economy has become. A small tremor in Japan's bond yields sparks fear in the United States, and that ripple travels all the way to Indian markets. This is the true face of globalization. The anxiety of one market can quickly become another nation's concern. At this moment, India must remain vigilant. It's not enough to simply take pride in our current economic strength. We must closely monitor every minor and major global development. The time has come for everyone, from ordinary citizens to policymakers, to understand that financial waves no longer respect borders. Bond yield isn't just a technical term. It is the thermometer of the global order, indicating when the ice will melt and when a storm is about to hit. The only question is, will India open its umbrella in time, or will the rain arrive too late for protection? Now, all eyes are on the next few weeks. Will Japanese investors actually dump US bonds? Will the US and Japan tighten their monetary policies? And the biggest question of all, can India withstand this storm, or will global market shocks once again rattle its economic stability? This is no ordinary financial event, it's a warning sign. A signal of an approaching storm. And this time, India must not just defend, but prepare to strike back, with policy, with data, and with public trust.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.